Hey everybody, Smart Silver Stacker here. I put out a video earlier regarding the spike up in the price of silver that we saw today. Now, that spike up didn't occur on any one obvious development or news item, and while there are certainly many factors at play that could be driving investors into the safe haven of the precious metals, I asked viewers to leave a comment sharing their theories for why the price of silver was seeing this giant move up. And there were some really great responses, so I just wanted to share some of those with all of you and also take the opportunity to respond to those comments and give my thoughts on them. So let's just jump right into them. First off, we get this great comment from Lobo Plateado Stacker. They wrote, "Here in Spain, physical bullion prices soared over the weekend, boosted by increased demand of stackers wanting to grab silver before the German tax slapped European stores, and the scare from the British pound tanking and Credit Suisse bank crisis about to blow up. Silver coin tubes hiked between 60 and 125 euros each, with physical ounces hiking between 3 and 5 euros. Today, prices rose between 1 and 2 euros more, boosted by rising spot price alone. The 10-ounce Britannia bar I grabbed last week now costs 60 euros more, and the ounces I picked up yesterday an hour before the hike are now 4 euros more expensive. Stocks are being swept, with half of the inventory on pre-sale and people queuing outside bullion shops in Vienna amid 10% inflation." So thank you very much for that great comment. And yeah, Credit Suisse, that bank, it looks like there's some concern about possibly restructuring and they may need a bailout to do so. And shares fell 11.5% today before they recovered a little bit. Some analysts are saying that it's capitalized well enough to restructure. And who knows if Credit Suisse specifically is going to go bankrupt, but if it's not them, I think it's only a matter of time until something breaks with these rate hikes by the Fed in this global economy that is drowning in debt. And, inventory shortages at shops and people queuing up outside of bullion shops. You remember in 2011 when silver hit $50? Bullion shops were jammed packed at that time. And it seemed like there was a We Buy Gold shop on every corner. And the next time around, it's going to be like that on steroids. And that's why you want to make sure that you have your silver and you have your precious metals now before that happens, so you don't get caught queuing up in a line trying to swap out some worthless paper currency for, a couple ounces of metal. Next up, we have Fifth Mar Div, who wrote, "Let's observe how the day progresses for precious metals. If the markets aren't slammed today and the closes for precious metals are near the day high, then possibly the metals markets have pivoted and are set for a run." And that is exactly what we ended up seeing. In fact, if you look at the overnight futures right now, silver and gold both seem to be holding on to their gains. So we will see what happens tomorrow, but this is a very bullish sign that the metals have been able to hold on to their gains throughout the trading session, have a good close, and they're still holding their gains overnight. And we do have some more really great comments to get to, but first, I do want to say a big thank you to today's video sponsor, silverbotanicals.com, household and personal hygiene products that utilize the power of nano silver. And something that I'm working on that I'm really excited about, this will probably happen sometime next month. I want to do an interview with Dean DeWolf. He's the CEO of Silver Botanicals, who also happens to be a chemist focusing on metallic chemistry. And of course, Dean works with silver quite a bit as it is in his products, and I'm hoping he can share some interesting information about silver's unique chemical properties and why it's such a useful industrial metal. So if you have some questions about silver that you would like to hear Dean answer, do me a favor and leave them in the comments down below. And if you enjoy these videos and you'd like to support the channel, one of the best ways to do that is to support our sponsors, so check out silverbotanicals.com today. Okay, so back to the comments. Thomas D wrote, "I think you're right from the mid to long term, but in the short term, we are getting more rate hikes from the Fed, and this will bring everything down. But then I think silver will take off again for the mid to long term for all the reasons you mentioned." And yeah, I think that the Fed probably does have a couple more rate hikes up its sleeve, unless, of course, something major does break in the meantime. And while it is probably a good idea to have at least some cash position to possibly take advantage of some kind of a big spike down or major sell-off, I personally would not want to be sitting with only a big pile of cash and no precious metals, because silver, it could drop from here, but today's move shows just how tightly coiled a spring silver is, and how when it does start to move, it moves fast. And if you're just waiting for a pullback on the sidelines, you might get left behind. James Mendoza wrote, "This surge will likely pass. Expect prices to come down again late November to mid-February as the Fed will raise rates at least two more times. My guess is that we'll see lows of 18-ish dollars again soon. As a side note, the silver shortage is real. I am still waiting for some orders I placed over a month ago and they're still on hold. And yeah, maybe the paper price of silver will fall back down to 18 bucks, although I do think that this move up does seem to have some legs under it, at least, so far. It's still very preliminary, of course, but I don't think that physical ounces of silver are going to be available for $18 anytime soon, or maybe ever again. I think that even if the paper price collapses in a big way, premiums are just going to shoot up, and physical metal is going to retain its value a lot better than paper derivatives of silver. And then we had Jules Fradette say, "This is because your awesome videos are making people buy silver." So, I know I'm just a small fry here on YouTube, and, I don't think that the day is going to come anytime soon when I can influence the price of silver in any really meaningful way. But I am sure that some people out there watching, I'm sure that some people have purchased silver after watching my videos. And I'm glad because that means that those people are more prepared for what is coming than they were before. And, markets are an aggregate thing. So you and me and everyone watching, we do contribute to the market when we purchase silver. That's kind of what the whole silver squeeze thing is all about, getting some metal and hold on to it and expose the rotting financial system for what it is. This comment also did kind of give me a chuckle. So thank you very much for that, Jules. Let's see. D. Martino said, "Am I safe in my junior silver mining stocks, or should I sell them and buy physical silver, or both?" And, I'm not qualified to give financial advice. I'm not a financial advisor. I'm just a guy on YouTube. So take all of this with a grain of salt, take it for what it's worth. But I can tell you what I am doing. And personally, I do own both. I own some mining shares, and obviously I own some physical metal as well. But mining shares, especially junior miners, those are a lot more risky in my mind than simply just holding some physical silver bullion. But there is potentially more reward there as well. If you pick the right company, you are getting silver in the ground, basically at a big discount to the actual price of that silver. But the company's got to get it out. So you're betting on a lot of factors there. There's also the management of the company. There's other factors that can go into the business, local laws and politics and regulations and things like that. Everybody out there has got to make their own decision. Everybody's situation is different. You got to make those investment decisions for yourself. But I will tell you that if someone came to me and told me that I could only hold one of the two things, if I could only hold physical metal or I could only hold shares in junior mining companies, I would take the physical metal every day of the week. So I hope that helps. And then we've got one more comment here from Danny Presson. Danny always leaves great comments on the channel, so shout out to him. Thank you very much for all the great comments you leave, Danny. And he wrote, "It's been speculated that the sudden rise in stocks, bonds, oil, and silver is due to the Fed meeting today. Are they planning an early pivot? If so, why so suddenly and soon? Has there been any negative developments that remain hidden so far that would lead to the Fed making an early pivot? Maybe, conversely, the Fed is planning accelerated rate hikes to deal with inflation. In that event, look for a reversal in today's action. A possibility that may explain the near unavailability of constitutional silver is the huge purchases of such by some rich people as reported in July." Okay, so regarding this Fed meeting today, October 3rd, I'm going to read you something from the U.S. Treasury. U.S. Secretary of the Treasury Janet L. Yellen convened a meeting of the Financial Stability Oversight Council. During the executive session, the council heard presentations from the Federal Reserve and Commodity Futures Trading Commission staff on global financial market developments, energy markets, and U.S. financial vulnerabilities, including some tail risk scenarios for banking organizations. Several council members noted that their agencies are closely monitoring the effects of recent developments on financial markets, including debt and energy markets, and assessing the potential impacts on financial institutions. Okay, so Jerome Powell was at this meeting along with high-ranking members of the SEC, the FDIC, the CFTC, and a number of other institutions. And they were talking about tail risks for banking organizations. Now, tail risk is the chance of massive losses occurring due to a rare event, as predicted by a probability distribution. So those tails are the ends of a bell curve. And this is something akin to a black swan event. And certainly our current over-leveraged system is highly fragile. Just look at the recent Bank of England intervention via QE in the debt market over there. Look at Credit Suisse. Liquidity concerns are getting worse, and something is going to break, and the Fed knows it. The question is, what will they do when that happens? Well, I suspect, and I think that markets now are beginning to realize that they're going to do what they always do. They're going to ease and they're going to kick the can down the road to avoid immediate disaster, and they're going to finance all of that with the printing press. And that could very well be why silver was catching such a big bid today. So thanks, Danny, for your comment, and a big thank you to all of you for tuning in. Stay safe, get prepared, happy stacking, everyone, and I will catch you next time. Smart Silver Stacker, out.